everybody does better when the accountant thrives. Getting to the place where you're thriving doesn't take that long, and we can probably reshape your practice in 12 to 18 months. So you have to ask yourself, is it worth it to me to stay on the trajectory I'm on, which might mean burnout, or do I want to pursue the unknown path so that I can have the firm that I want, the life that I want, the clients that I want, and the revenue that I want?
Welcome to Deduct This, powered by ProConnect Tax. This is where tax professionals come together to share ideas, experiences, and fresh perspectives to help you grow your practice and your future. We're glad you're here. Let's get started.
Hi, and welcome to another episode of Deduct This with Carrie and Lexi. I'm Carrie.
And I'm Lexi. Today, we are diving into one of the most common challenges for tax professionals and CPAs, and that's how to scale and continue to scale your practice and handle more clients without overextending yourself and exhaustion.
Oh, I'm so excited. Today we have Geraldine Carter, who is joining us. She's a renowned business coach who helps CPAs and tax firm owners cut down their working hours dramatically without sacrificing revenue. Geraldine, thank you so much for joining us. We are thrilled to have you.
I'm excited to be here. Thank you to you both for having me.
Yeah, no, oh my gosh, we're so excited to have you here. Like Carrie said, your career has been so fascinating, and we're excited to dig in a little bit into your new adventures that you've had, coming all the way from engineering to really starting a business where you're coaching CPAs and tax pros. Such a unique path. You've identified solutions to help others and to prevent that burnout among CPAs and tax professionals. So we're excited to hear about your journey and digging into that a little bit.
So it's been a long and winding journey, and I'm one of those people who likes to find interesting challenges and in particular problems that haven't been solved yet. And I find it fascinating when I stumble into a problem that seems like it should be solvable, but hasn't been. And I found that with accountants, EAs, and CPAs and the single firm owners. And I thought, how is it that if their clients are mostly business owners, that they haven't gotten what they need to be really great business owners on their own? What's going on? And once I started digging into this problem, there are a finite number of variables that are the drivers that influence how many hours they work and how much revenue they bring in. And now that we know the solution, it's readily implementable. It's not rocket science. It does take effort and it does take a bit of emotional grit, but it's absolutely doable. And helping accountants and EAs and CPAs to get their hours down without losing revenue is a really rewarding thing to do because, as you all know, we need these folks in our lives. They're really important in the business ecosystem, and it's great when they've got thriving businesses.
Do you know what's so interesting is, what you just talked about is super fascinating to me because it's sort of like we have to undo things that we have learned. So I've been talking to tax and accounting professionals for over 20 years. And, it's the mindset of the lawyers and, accounting, not just accounting firms, sorry, advising firms and things like that, where you have to do billable hours, right? You're counting like either 15-minute increments or 30-minute increments. And you're trying to change that mentality, but that was ingrained in people for years, tens of 20s of years. And so I love to hear like your take and why you're trying to get people to switch and think about things differently.
So it makes sense that a lot of us think this way. Most of us came up through the ranks as employees and we got paid for time. We either got paid by the hour or we got paid salary per year. It's all a function of time. So it makes sense that we have this way of thinking. The problem is that when we own our own businesses and we try and run our businesses profitably off of that mentality, it doesn't work. It doesn't work because it's wrong. It's incorrect. Revenue does not come from labor or effort. Your clients don't really care how hard you worked on a certain thing. They just want the outcome. So we need to change as business owners how we think about the generation of revenue and shift our thinking to where revenue actually comes from, which is value created for clients. And that takes a hot minute because, like you say, for decades, we learned effectively the wrong way. So once we learn how to create revenue from value, suddenly it gets so much easier to create revenue because we're focused on value creation for clients. It all lines up. The revenue comes much more easily. And the way that I help my clients learn this as quickly as possible is to help them think about the things that they spend money on. Mm-hmm. So they might spend money on concert tickets, football games. They might spend money on airplane tickets, kids camps, whatever it is. And in those purchases, nowhere do they look and say, well, how long did it take for a person to actually create that? They don't care. So in helping the CPA look at their own business as a buyer, it can really help them see, oh, my client is in fact not buying my time. They're buying the outcome. And the outcome that they're looking for usually is access to me. They want guidance. They want clarity. They want to be able to make better decisions so that they can save more money, be more profitable, and so on. And once we help the CPA, the tax pro, come around to seeing their business through the eyes of the buyer, that makes everything come around a lot more easily. It makes pricing a lot easier. And then they find ways to create revenue that don't necessarily require a commensurate amount of work, and then we start really pushing profit.
No, that's awesome. And you're helping them find their own value. We see this all the time. I was talking yesterday on a plane with someone, a accounting professional that's been in the industry for years, and she was just saying how she knows she's not charging enough. So you're coaching these people and helping them realize not only their value, but take the steps to get what they need out of, the relationship of their clients. So I want to ask you this. What's that first bottleneck that you typically address when you sign up and start coaching some of these individuals?
So there are usually two primary bottlenecks, and the question is just which one do we go for first? Usually it's that they have too many clients. They also have too many kinds of clients at too low prices. And the second primary bottleneck is just that they have insufficient systems to run their business. And the symptom of that usually looks like they're running their day out of their inbox. So if you have too many clients, too many kinds of clients at too low prices, and you're running your day out of your inbox, pick where you want to start. I don't care. It's like all paths lead to Rome. So if work is just bottlenecked and jammed, sometimes we'll start with the course that I've created for my clients. I call it Simple Systems Free Time. And it's based off of David Allen's Getting Things Done. It's nothing new under the sun, but it essentially enables the accountant to be able to get the information that is in their inbox off to the correct repositories so that it can just sit there and be in the right place, and the accountant knows where to find the information the moment they need it, rather than doom scrolling through their inbox and asking, what should I work on next, which is woefully inefficient. So either we'll start with systems and getting their business organized at a high level with systems so that information can flow to the right places, or we'll start with too many clients and we'll disengage a bunch of clients. That can be great, but emotionally that can be really hard for people, especially if they don't know how to price, because they might get paralyzed with the thought, well, if I fire all these clients, what's going to happen to my revenue? So if they're stuck there, we need to reprice a bunch of clients and offer higher prices at higher margins. But that takes a bit of time. And if there's a logjam in the business, it's usually 2 to 4 weeks before we can reprice clients and get that money coming in the door at higher margin. So it just depends on which is going to be the easier logjam to undo, but they both work. Like I said, all paths lead to Rome. Let's just get going on one of them so that we can start freeing up the workflow.
How do you, so we've been hearing this. It's interesting. You said something earlier that I've never heard before. And again, I've talked to literally thousands of people, is when you start looking at, it's not a commodity. You're not trying to sell time. I have a team of marketing professionals that work for me. I don't care if it takes them 3 weeks to do an activity or 6 minutes to do an activity.
Yeah.
And I love that you said that, because it's so true. I care about the output. I don't care what the input was. And, more and more, I think it's interesting to be able to figure out what are those bottlenecks. And I think that's really interesting. And I do think that people have lived by their inbox. And so I love it. Sorry, I know I kind of sidetracked there, but I've just literally never heard somebody speak about it that way. And it so resonated with me. So thank you for sharing that. If you were talking to somebody about where to start. So I know you do this as a business and you coach different people, but where do you have people start on day one? Because I think it can be overwhelming to go, hey, listen, I do have too many clients. I am living by my inbox. I'm working 90 hours a week. What's the first thing you do to start?
Well, I mean, if people are really looking for low-hanging fruit, the first place to start is to turn off your Outlook binger so that thing stops distracting you, and then get social media off your computer and get it off your phone. Those are the things that are the lowest hanging fruit that will have the fastest effect, with little deleterious effect to your workday, because they're just distractions that you don't need, preventing you from working on what you actually need to work on. So that's always the easy win. Beyond that, the next place to start is inside your client roster, and to identify the clients who have been tapping your shoulder asking you for more. You know who they are. They want more from you, more attention, more time, more understanding, and so on. And you have a sense that they'd be willing to pay you more for more time, attention, guidance, clarity. I help my clients find those people, because those are the ones who see more value and would likely pay you for a higher quality of service, not necessarily for doing more work. They're not necessarily asking you for more work. They might be asking you for a little bit more work, but we want the ones who are asking you for more guidance, expertise, and clarity, because there's a ton of value there. And those are the folks who typically own businesses, or perhaps they're high net worth, or perhaps they're in retirement and they want to be, or pre-retirement, and they want to be making wise decisions now. And helping them with that doesn't necessarily require more work or more hours or more time from you. It just requires a intentional decision to be available to them. And that's where we can create more revenue without adding more hours. So we're looking for more clients like that, because once you offer a client like that a tiered option of packages, bronze, silver, gold, call it, or platinum, et cetera, once we offer the client those kinds of packages at higher tiers, higher prices, higher margin, and suddenly you experience what it's like to get paid without adding more work. Suddenly you go, oh, and then you start to find clients in your roster who might be available for the same kind of thing. And then we attack the client roster basically from the middle and go from the inside out in sort of concentric circles. And as we bring in clients at higher prices, higher margin, it makes it easier to let go of the minnow clients at lower prices.
Oh my gosh, I mean, this topic has come up so many times in different episodes. It's one of the reasons that a lot of people are not going into the profession, to be honest, right? Like, why it's dying out. Like, people don't want to work 80 plus hours anymore, especially if there's a way to do it for 40 and make the same amount of money, if not more.
Or 20 or 15.
Yeah. Can I sign up? No, I'm just kidding.
I was like, wait a minute, how do we do that?
Yeah. No, and it's just, what a way to attract new people to this profession, by the way. I mean, this could be like a game changer if we really start to get peers and firm owners and those that are influencing the up and coming people coming out of accounting and finance, schools. Like, what a way to start them out the gate like this. It could be pretty powerful for the future of tax and accounting. Okay, so you reduce their workload, you're saying by, potentially 40 hours, if not more. Can you share a real life example? Because I want to hear this. I want to hear how you went in and did this, because that's powerful.
Yeah. So I have lots of examples of people who have gone from what they say completely stupid hours. They say things like, my stress level was at DEFCON 10. Turns out DEFCON only goes to 5. So even more so. And now they're totally chill. And they say things to me like, yeah, I'm taking a week off, and it's right before the September 15th deadline. I'm gone for the whole week. Or they say, it's tax season and I'm going on a cruise. I'll be in the Caribbean totally offline for 10 days. Or they'll say, I'm going to my cabin during tax season. I've never been to my cabin in tax season before. I've always been working stupid hours during tax season. So we know we have lots of examples of people who get there. And the story usually sounds like, I'm buried under a pile of work. I go to the office on Monday, I work 10-hour days, I come home, and then on Saturday, I get my work done and I clean up on Sunday, and I just repeat. And I haven't taken a 2-day weekend in years. And where we typically start is with all the madness, all the craziness, all the one-off, all the custom stuff. And we just have to get the work that they've promised to deliver out the door. We just got to check that stuff off. Once we check that stuff off, then we look inside the client roster, like I was mentioning in the last one. I could think of a woman who just had the sort of, she referred to it as my big fat Greek wedding, of like the Greek family of clients that just grows and grows and grows. And suddenly there's a car dealership, and then there's a car wash, and then there's a coin op laundromat, and then there's a new LLC, and there's a new partnership, and suddenly there's oil and gas royalties, and then now there's 20 people, and now 20 family members, and the matriarch and all things. And how do you unentangle that, right? And we just keep chipping away until we have the clients that we want, until we have the kind of work that we want, And now I think of this client in particular, she's niched into restaurants, which everybody says is like, I would never niche into restaurants. That's crazy. But she's got restaurants in her blood. She knows it inside and out. That's who she works with. She works with restaurant owners who have at least 2 locations, up to 5 locations. And then once they get too big, then she cycles them off because she can't service them anymore. And she's one example of somebody who's worked weekends. She's an example of somebody who worked nights, days, weekends, and is now on vacation for a week right before the September 15th deadline. So we know that this works. We know that this process works. We just have to do the hard work of implementing and what feels like emotional work. And I know that we're in the land of CPAs and accountants, and we like to pretend like we don't have emotions and we're logical, but we know that's not true because everybody feels bad about firing their little old ladies. So we've got to do what feels like the difficult emotional work of making decisions about the legacy clients on our roster and increasing prices and sometimes feeling bad about it until we love our businesses again and until we have the business that we want to have and we know that this is imminently doable when we just buckle down and make the decisions.
It's so true. It's so powerful. Like, that's so right on.
Yeah, and that resonates with Lexi. As she loves a big Greek wedding. She's always talking about this. She's a Greek, and so she loves to talk about a big Greek wedding. But it is true, like the tangents of all that. Like it's I love the analogy of it. And it's interesting because one thing that you touched on too is I hear this over and over is that when people do sort of optimize their firm, a lot of times they are getting to a niche. So like that example of the restaurants that once they get over 2, they become too big. So I think it's really understanding your specialty. And what I've heard people say is, hey, I have 400 clients and I know I'm doing all these 1040s and doing things. When they really just take a kind of step back to kind of see the forest through the trees, if you will, they will probably see that they do have a niche in there that they didn't even necessarily know that they had.
Absolutely.
Right. And then what I've also heard is that once you start specializing in that, you also it naturally grows because word of mouth is very powerful. And then also that becomes an attractor for people as well to say, oh, they do. Hey, I heard you work with this person who has these restaurants or a hair salon or dentist, I've heard all the different niches over the years, but it's interesting to me that when I've heard that, they said, hey, once I picked my niche, they just came to me. Right. It's like, if you will, they will come to you. So what are, I think that's powerful. What are some other, are there tools or any, techniques that you find that people help kind of analyze their business to really figure out where they should focus to, unfortunately, get rid of, the grandma that's going to call you all the time. You're not paying that's not paying you a lot of money.
Yeah. So there is one tool that I give to people that's a super straightforward tool, right? It's just the 80-20 rule of where is the bulk of your revenue coming from. And you guys know the 80-20 rule, as do your listeners. For the people I work with, it tends to be the 80-30 rule. So 80% of revenue comes from 30% of clients, which if you do the inverse means that you could get rid of 70% of your clients and have 80% of your revenue, right? And you can just take your clients, put them on an income by customer summary report right out of QuickBooks. You put them in a spreadsheet, sort them, and you can just do the manual way. You can do the formula way, but you can also just do the manual way. You just go through and add up until you get to 80% of your revenue and how many percent of your clients is that. And you can put that on a graph and you see it looks asymptotic for my non-mathy friends, hugs the y-axis, comes down, hugs the x-axis, and goes out to infinity, right? And you start to see, you're like, oh, look at all those clients I'm schlepping around who are hardly generating any revenue for me. So you can do that if you like for giggles, but most of my clients know intuitively what kind of work they want to be doing and what they want to get rid of. They know they want to get rid of, what do they call them? The spreadsheet S-corps and the ones who bring a dumpster fire of receipts in February that you got to clean up before you can do the returns. They want to get rid of that garbage. It just gets in the way. They don't dislike the client, but the work is just impossible. Yeah. And they might just never want to touch e-commerce or inventory again, or they might never want to see GovCon or another nonprofit, or they might love nonprofit and only want to do nonprofit. They tend to have they have intuition about what they enjoy doing and what they would love to build a business around. They just don't believe that they can get there. So one of the things that I think is really powerful is inside my community, they're surrounded by, I have a membership for accountants, CAs, and CPAs where they're surrounded by people who are doing this work. They don't believe that it's possible for themselves because they think that they're a special snowflake, and they are a special snowflake who deserves all the love. But from a business standpoint, they're not a special snowflake. And when they see other CPAs, EAs, and accountants doing the same work, and they go, oh, if that person can do it, then it must be possible. And after enough seeing it, that it must be possible for them, it starts to infiltrate, and they start to go, oh, if it's possible for them, maybe, just maybe, it's possible for me. And the thing that we really need to change is their belief, right? Because like Henry Ford said, if you believe you can't or you can, you'll make it true. And right now they believe that they can't. So we need to get them in a situation where they start to believe that they can. Because once they believe that they can, then it's just a matter of flipping the dials. And then it's a matter of tactics. And then it becomes true. The firm comes around. It doesn't take that long. My rule of thumb for my clients is 2 months for every $100,000 of top line revenue. So we're not talking an eternity here. For most people, we're talking like 12 months to reshape their accounting practice. So that's kind of a long answer for, are there any tools? Right. And the real answer is surround yourself with people who are making it happen, which is get inside a community of people who are making it happen instead of surrounding yourself in the crab bucket of naysayers who will tell you all day long your clients won't pay that.
Yeah. And there's definitely that. I mean, there's a lot of people that believe that, you know, and that, again, you're helping coach them through like understanding their value and bringing that. Okay. So what about the person or the firm owner who maybe they don't know who to offload? Maybe they don't know how to right size their client base. How do you suggest that they begin aligning to moving towards that without alienating long-term clients?
Well, you might have to alienate some long-term clients. You know, you can't keep everybody. You just can't. So the way to not alienate, though, is to always be graceful, right? We can think of all the stories that we've heard of people, employees who have been fired, where the relationship has ended. And what they say time and again was not that they got fired, it's how they got fired. And we've all heard stories of people who've gotten fired, but it was done in a way that was kind and considerate and respectful. And they can swallow being let go when it's done in a way that is kind and considerate. So I take the same approach with my clients when they need to disengage clients of their own. It's not that you have to disengage clients. It's that you do it in a way that's respectful. And then most of their clients will say, I totally get it. Oftentimes they will say, I'm super excited for you. That sounds very excited. Of course, I'm bummed that you're no longer going to be my person, but I'll figure it out, right? And we actually have numbers on this. The grouse rate, if you will, the grouse rate is 2%. 2% of your clients you can predict will come back at you and they will tell you what they think. And the other 98% will either be neutral or happy for you. So we know that this is just part of the process. And the question is, how long will you carry being unhappy, overworked, stressed out, strung out, at the edge of a heart attack for the sake of X dozen number of clients who could probably find another solution if you just opened the door and said, hey, I need for you to find another home.
Yeah.
That's powerful. I can imagine, you've coached tons of people over the years. And so my guess is that a lot of this is going to be like, it's a mindset shift that has to happen. What do you find is like the biggest kind of barrier to shifting that mindset, right? Because if you don't, you have to take this first step, and the first step is always the hardest, right? So what do you do, or what do you say to them?
Well, the three things you're going to face are guilt, greed, and fear. So let's deal with the guilt. You do not run a nonprofit, and it is not upon you to save the entire world. So we need to deal with feeling guilty. You are not a bad person for making money, and you are not a bad person for wanting to make money. And if you were truly a greedy person, you wouldn't be an accountant. Let's be real. You would have found something else to do. So now we need to deal with fear. And fear usually is around perfectionism and people pleasing, right? We've got card carrying perfectionists, card carrying people pleasers in this space. So let's just go right for the jugular here. If you're a people pleaser, knock that off. It is not in your purview to please people. You do not have control over people's emotions. Sorry, not sorry, but you just don't. It's terrifying when you realize that, but it's also super freeing because now you're not responsible for people's feelings. So that's, if you don't believe me, go to the serenity prayer, go to the serenity prayer. Lord, grant me the wisdom to know the difference between what I control and what I don't. And the other one is perfectionism. And if you're perfectionism, usually it's just hiding a fear of criticism. If we make things perfect, then we won't get criticized. We tend to project that onto other people. We think they're going to criticize us, but really the critic that we're most worried about is the one on the inside. And we make things super perfect because we're aware of how harsh our inner critic is. So the thing that we need to learn is how to be kind to ourselves. And most of us didn't get taught how to do that. We were taught how to be critical of ourselves. And it is a wonderful thing to learn how to be kind to yourself, because when you are kind to yourself, no matter what, suddenly you can make business decisions and you can start making mistakes, which we need to make in order to move our business forward without fear of the reprimand that we're going to get on the far side of the decision. So your question was, what are the mindset shifts that we need to make? We need to get over the guilt, the greed, and the fear and the people pleasing and the perfectionism. And if we can solve those things, business gets way easier.
You said a word, and I know you talk about this a lot on your podcast and your newsletter, knock it off list.
Yes.
So tell me about the knock it off list. And you kick this off with your clients when you're talking about potentially coaching them. What does that mean for people listening? What do you say, knock it off?
So knock it off is just like, quit doing all these things that we know are keeping you trapped in the accounting firm that you do not want to have. And we need for accountants to stop doing these things in order to have what they want. And they'll say to me, I want to take home $250K and work 35 hours a week in tax season and 25 hours a week outside of tax season. But then they will do all of these things that will sabotage what they in fact want to have.
Right.
So by way of example, they will say yes to prospects when they're already working 75 hours a week. And I'm like, knock that off. You do not have time to take on a new client. Or they will say yes to discovery calls for free. And I'm like, knock that off. You don't have time for a free discovery call. You already have 40% too many clients. We need to get rid of clients, not take discovery calls. If you're going to take a discovery call, charge $1,000 for it. You'll get rid of the tire kickers and the ones who could have read your website where the answers are. Knock it off. Stop giving your time away for free. Stop underpricing. Knock it off. You do not have time to be underpriced. We need to double your prices. Let's start with 50% higher if we need to, just because we don't want to shock the entire system. There's a whole litany of things that they need to stop doing, but the brain is always like, no, the brain doesn't want to do things that are outside of the brain's comfort zone. So it comes up with clever sounding excuses and rationales for why they should keep doing the things. So I just get in there with the knock it off, because otherwise we're just going to burn time with them giving me the 1,000 excuses that I've heard a million times over that I'm like, no,
it simplifies it.
We don't do that
awesome.
anymore.
Yeah.
Yes, we just simplify it.
Well, and it's almost like, it's kind of like the parent that tells the kid not to do it. And you're just like, it kind of gives you permission to stop. Like, you're like, well, they said to stop doing it, right? So stop doing it. It's interesting. A lot of this is interesting. Actually, all of it is interesting. I don't know why I say a lot of it is, but there was something that you said that made me think about, you said the 80% that you did the 80-30 rules, what you typically are seeing. So 80% of your revenue is coming from 30% of your clients. What do you suggest when I go look at then the 70% of my clients that are not necessarily bringing in, a ton of my revenue? They're only bringing 20%. Do you say just kind of make a list? Like, how do I step by step think about it? Do I look at the list and go, okay, let's go with the least revenue generating to the most, up to my, to get my group of people. And I start making my phone calls. And again, you've already said I need to have a breakup, if you will, but I can do it with kindness and respect. And my guess is that you're going to learn from each and every one of those calls what worked and what didn't, so that when you make the next call, you're kind of pivoting and tweaking throughout the process. Is that what you suggest?
Yeah. And I also suggest knocking off overcomplicating things, right? Because it's such a great way to procrastinate doing things that feel gross and scary. Yeah. So we keep it really simple. You look inside those 30% of clients that are bringing in 80% of your revenue, and we just pick the ones that we call them friendlies. So the ones who you can have a conversation with where you feel like the waters are even, and they will give you real feedback. They'll just be honest and transparent, straightforward with you. And it doesn't feel, you don't feel like you've got to prove anything or that you've got to have it super dialed or super polished. You could just be like, hey, listen, I'm taking my business in this direction. I have some ideas and I would love to get your take on them. Can you just give me your honest take on what you think of these packages? Bronze, silver, gold, here's what's included. Here's what the prices are. Do you think I'm in the ballpark? Do you think do you think this is about the right price? Does this make sense to you? Is it clear? And you go to your friendlies first because they'll just tell you what they think. And that's super useful feedback. So identify the friendlies in your client roster, the ones who are in your 30%, and run your packages and prices by them and how you talk about it. Because remember, your business owning clients aren't steeped in accounting jargon. They're not fluent in it the way that you are. So we need to package it in plain English.
Yes.
And say, this silver package is for this person and it does this thing at this price. And this package is for this kind of person. It does this stuff at this price. Does that make sense to you? Is that clear? Is it not clear? And they will give you great feedback. And once you implement, you will learn from the experience and you will, like you say, iterate and make it better. And as we get more high margin dollars in, we go, okay, what's an equivalent amount of dollars that we can let go of, right? So that we protect cash flow, so that we're not, as we go through this process, we're not bumping against the bottom of our bank account. And what we don't want to do is create any kind of cash flow scarcity, because as soon as the CPA is in scarcity, their brains don't work as well, right?
Yeah.
Yep.
We just go to the reptile brain, puts the blinders on. It's like, oh God, threat, not enough cash. And it doesn't think as effectively as when there's ample cash. So we always want to protect cash flow so that the accountant isn't worried about that.
Yeah.
Well, and it's, oh, sorry, go ahead, Carrie.
I was gonna say that's super helpful. Well, one thing really quick is I heard this. So one of our partners that we work with is Ignition, and they do pricing and it's sort of that same idea, a subscription model. So when you send your letters of intent, oftentimes they'll send the same thing, bronze, silver, gold packages. And what they told me, I was fascinated by this, and I'd be curious to see if you've seen this as well. Do people upsell themselves? Like if you send it to a client,
do clients upsell themselves?
Yeah, because they'll see what's in the next package and they're like, oh, wait a second. I want the other thing. I want the higher one.
Yeah. So there are a couple things in here. So we do bronze, silver, gold pricing so that the client can see what the most expensive version is. And underneath this, you're touching on pricing strategy, which we haven't really gotten into. And I don't know that we have time to get into pricing strategy as a whole topic today. But part of having a gold package is to anchor price if you don't want the client to have the gold package. So there have been numerous cases where we've created a gold package that is something of I don't want to call it a decoy because the intent of the word decoy is to deceive, but it's not meant necessarily to be chosen. It's meant to provide contrast against the silver, which is the obvious choice for the client.
Right.
So if we're creating a gold as a contrast, as an anchor price high, so that the obvious choice is the silver, then in that case, the client isn't probably going to talk themselves into gold. But sometimes we want to price so that gold becomes the obvious option. And the client thinks, well, if I'm going to buy silver, I might as well buy gold because there's so much more value in the gold that for a 25% price increase, I might as well get all that extra value. And they will talk themselves into gold. Part of repricing clients is around the strategy of, do we want to nudge clients into silver so that the vast majority of our clients are in silver, and then we leverage systematization and most clients in silver so we can just repeat? Or do we want to nudge clients into gold because it's so much higher margin with a lot less work, and we're pricing the access and the expertise and the guidance? So how we design packages and how we price packages is dependent on where we want to nudge clients. And that's very much a strategy thing and not just like a scope of work thing. It's how are we thinking about the totality of the business and what's the whole picture of the entire business and what do we want the whole business to look like? And then pricing and packaging and strategy comes out of that. So do clients talk themselves into gold? Absolutely, when we design it that way. Do clients talk themselves into gold when it's anchor price? Probably not, and absolutely not, because we've designed it so that they don't, because we want them in silver. So longer answer than you were probably expecting.
But helpful. but helpful.
So
But we need to
helpful.
think about strategically, where do we want our clients?
Oh my gosh, yes. And this is a huge topic. It gets brought up every episode, every customer that Carrie and I speak to, whether they're prospects or returning, and so I feel like we need a whole episode just on pricing strategy. So
I agree.
we might have to have you come back. But final question. Thank you so much for your time today. But what's your key takeaway then for an accountant or a tax professional or a CPA who's feeling stuck in the cycle of the overwork? Because let's be honest, that's majority of them right now.
Yeah. So the thing that I want for every accountant is to know that everybody does better when the accountant thrives. They do better, their clients do better, their family does better, and their community does better. It's better for everybody when the accountant is thriving. And that getting to the place where you're thriving doesn't take that long. And it's not that hard. Remember, we started at the top, right? I have an engineering degree from an Ivy League university. I went to school with the rocket scientists. This is not rocket science. It takes effort, it takes tenacity, and it takes making decisions and feeling a little bit scared. But if you're willing to do those things, it is imminently doable, and we can probably reshape your practice in 12 to 18 months. So you have to ask yourself, is it worth it to me to stay on the trajectory I'm on, which might mean burnout and just lighting a torch to my entire firm, or, right, my life's biggest asset that I've built, or do I want to pursue the unknown path, which is unknown to me, but totally known to 100 people in my community, that this is doable, right? And am I willing to feel a little bit uncertain while I pursue the unknown so that I can have the firm that I want, the life that I want, the clients that I want, and the revenue that I want? I hope for your listeners, the answer is obviously yes.
100%. Absolutely. So incredible. So great. We are so thankful for your time today and the knowledge and just all the advice. And we're definitely going to have you come back if you'll have us. And so just thank you so much. Yes. And the clear path that you have, just given to our listeners today, because this is, like I said, obviously it's a big topic or you wouldn't need to be coaching people out there.
Correct. Yes. I love it. You gave some really practical help that I think that people can take the first step forward and understand that there is a little bit of uncomfortableness, but they're going to reap the rewards on the back end. So I loved it. Thank you so much.
Thank you so much, Carrie and Lexi, for having me.
That's it for today's episode of Deduct This. For more strategies and tips, follow Geraldine Carter on LinkedIn and check out her podcast, Business Strategies for CPAs. Until next time.
Thanks so much.
Thanks for being part of Deduct This, powered by ProConnect Tax. If today's conversation gave you something new to think about, visit accountants.intuit.com for more insights and resources made for professionals like you. We'll be right here, helping you turn expertise into opportunity.